please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We spoke to Andrew Holland, the CEO of Avendus Capital Alternate Strategies. He expects some volatility in the market as we head into the elections. Listen in.
Understanding that we've got elections next month, which will obviously make the markets volatile. But the 2-year Treasury in the US and the 10-year Treasury in the US, that differential is only 50 basis points, and whenever you see an inverted yield, usually means that we're heading for difficult times. RBI kind of Goldilocks scenario for the Indian economy of strong growth, no inflation, just doesn't wear well with me. And I think the risk to their kind of targets and inflation is on the high side, rather than I expect them to be to get to those kind of figures. We like private banks, we like selective NBFCs because they will continue to take market share from the PSU banks. There's no doubt in my mind that will happen, so we will continue with that kind of strategy. The only thing that's probably kind of less kind of negative PSU banks is obviously we've seen this electro steel kind of move towards Vedanta, which will probably give some optimism that the banking sector is getting through the problems and so forth and so on. I still think we're a quarter or so away, but sentiment wise it's probably will keep the sector reasonably buoyant. But that said, there's still a lot of problems out there. We think the worst is over, and if you're going to take an emphasis where the dividend yield, if you take into account all that they're doing, is around 6%. So that gives you a lot of cushion for the share price, and obviously we will have to wait and see what his the new CEO is going to tell the analysts next week in terms of his strategy. But I think the rupee as well will depreciate. I'm not comfortable with the fiscal deficit. I'm not comfortable with inflation in India, and therefore I think the rupee will head towards that kind of 67 level, very quickly, and that would probably be very favourable for IT as well. I think earnings growth this year will be around 15%, and I think markets should move up in line with those kind of increases in earnings. So we're more optimistic on the earnings growth for this year and GDP of 7–7.5%, but certainly not the Goldilocks scenario which the RBI gave us.